Welcome to the podcast, Chet Shah. He is the CEO of Wirex. He has been the CEO for how long now?
Just under 4 months.
Has it sunk in yet?
Yeah.
Yeah, I bet it has.
Yeah, from day one, because there was so much good stuff to be getting on with.
Yeah.
But yeah, it's certainly been a great journey so far. I should clarify, I'm the CEO for Wirex Limited.
Oh,
Yeah,
okay. What's
because
the
there
difference?
are a number of other entities in the Wirex group, and we have separate MDs for various other entities in various other jurisdictions. So,
Is it jurisdiction dictated, or is there another CEO in the UK?
no, it's all down to jurisdiction.
Oh,
so,
that's okay. I
yeah.
see. That makes sense.
Yeah.
Very good
it's still
clarity.
a tough job.
I bet it is, yeah. How many people are underneath you?
So my team consists of, so if we include a variety of operational roles, there's about 43 people currently, but I have 7 direct reports.
And what goes, sorry, this is so recruiter of me. So what reports go into you then?
So we have a chief of staff, we have our financial crime director, our head of compliance and MLRO, and then our head of assurance, and a few others.
It was interesting, because you came on in more of like a CRO role, didn't you?
Absolutely. So when I joined Wirex back in, 2022, I joined as the Chief Risk and Compliance Officer, specifically for the UK entity. Then that role broadened out to a global role.
Yeah.
And now CEO for Limited. I still obviously have involvement in financial crime matters across the globe because of my level of expertise and knowledge of Wirex.
Yeah.
So that's important as well. But it's been an interesting journey with Wirex, and it's been a testament to Wirex's trust in me, hopefully, as well.
Well, I'm so picky about all the CEOs that want to come on here. No, I basically begged you to come on here because I thought it was really interesting to have someone with that perspective leading a business in a strategic way. But in my research before the podcast, which I actually do, everyone would be surprised to learn, the interview that you did, I think it was way back when you started at Wirex. It was really interesting, the language you were using. It was a day in the life of that they had done. And you spoke a lot about strategy and a lot about commercials and a lot about vision. And it was a really foreboding kind of approach that you could see that you kind of thought like that. Was it your aim to become the CEO? Was that a succession plan, or was it quite organic?
No, it was very organic.
Yeah.
So when I joined Wirex, I did have an absolute strategy that I wanted to follow with the blessing of the founders and the directors of our holdings company, which was essentially just to ensure that Wirex can be that trusted brand. It can deal with any challenges that a regulator may throw at us, and new regulations may come along, and how we deal with that. And I think it's fair to say at the time, the fintech industry, 3, 4, 5, 6 years ago, was still finding its feet when it came to how to deal with regulators, what the regulatory requirements were, not just in the UK, but globally, because they are ever changing.
Yeah.
So one of my main aims was to make sure that the risk and compliance function in Wirex was fit and prepared for growth aspirations. So now I wanted the risk and compliance team to be a competitive advantage. So, partners, customers, regulators, they don't want to do business with you if you can't demonstrate that you're going to keep their interests safe as much as your own interests.
Oh, yeah.
So, there are many fintechs who outgrow their regulatory approach, and then they just get into trouble.
Oh, my God, yeah.
Yeah. And I wanted to make sure that Wirex didn't fit into that particular category. So yes, very strategic, very much building the team up from scratch, essentially, not doing what was previously done and doing it my way with the blessing of senior stakeholders, and then really making sure that we embed a culture where risk and compliance assists the business grow. It helps the business meet its aspirations. It's not something that's just put in the way. We don't stop growth. We do challenge it. But our role is not to say no, it's to find a solution to make the goals real.
I feel like we're coming full circle with risk and compliance, though. And I think fintechs are a real microcosm of the economy. And that, do you remember when compliance was becoming big? This was before all the fines. This was like, actually hedge funds are a really good example of it. It's like you have a head of compliance that is there to make sure you toe the line, and it's business enablement, but really the success of the business is the priority. Because I think fintechs are so close to the sales cycle and they're so lean, you can really see the impact and the hindrance that, or the hindrance, I should say, that compliance and fin crime can have done if it's done in a prohibitive way. So if it's not done with common sense and it's not done with someone who's leading it strategically.
And I think that's culture driven. So let's take a look at some of the large banks who are constantly being fined for fin crime failures. Okay, so why is that? You know, if you look at RBS and HSBC and Lloyd's, it's not because they haven't got the expertise behind it. It's not because they haven't got the financial means to do something about it. So therefore, is it possibly the culture of these organizations where they say one thing, but actually the tone from the top is completely different? I don't know. That's worth exploring.
Yeah.
But with smaller firms, the culture and the tone from the top can be focused.
Well, you're the tone from the top. This is a great example. You are the tone, like you are the CEO. Actually, it's another company that we work closely with, IFX Payments. I'm going to shout them out because they've got an incredible compliance culture. I obviously had Cass on the podcast last week, but I met their CEO, Will, ages ago. And I remember coming away from the meeting going, oh my God, he really understands financial crime risk and compliance, and not in a, oh God, I've got to report to the board on this.
Yeah.
More of a, okay, this is going to be the bump in the road for sales. Let's work together to make sure it's not a bump in the road, and we're all working together and bringing on clients that are within the framework, and we're not trying to sneak people in the back door and all this kind of stuff. Yeah.
And I'm not sure how a CEO of a fintech, for example, can do his or her job effectively without some degree of background knowledge on the key risks. And you speak to most CEOs and they say, right, the key risk is strategic risk, or it's financial risk. Well, actually, no, your key risks are beyond that. It's financial crime risk, it's conduct risk, it's compliance risk.
Yes, but if you're looking at the founders, it's changing, right? So the people who are the founding fathers, Hamilton, of these firms are coming from product, and they're coming from tech, and they're coming from finance. That's covered, right? That's not the chink in the armor anymore.
Yeah.
Whereas it used to be the chink in the armor. We used to hire, the big banks used to hire big, expensive product guys and big, expensive strategy guys. They got them. They are them. What they don't hire and what we don't see often is fin crime and risk people finding firms.
Which is still quite shocking to me, considering the damage failures in those particular areas of risk management can do to the reputation, to the brand, not least to the bottom line of a business. And I still see on LinkedIn MLROs being recruited for less than, I don't know, £80,000 for argument's sake.
Don't do it, guys.
Or the ad says, if are you an analyst? Are you a great analyst? Great, we've got a deputy MLRO role for you.
See, it's quite interesting. Me and Ian have noticed a trend. No, wait, something I want to say just on that point before we move on is a really good case study in not getting it right first time and pissing off the regulator is Revolut. They probably had the right stuff in play, but the regulator was like, no, you tried to be sneaky little sneaksters, so we are fine-tooth combing this. And if they had shown deference is not the right word, but if they've shown deference or reverence to the FCA and really said, we respect what you do and we're trying to get on board with this, yada, yada. The FCA is this ambivalent being, but it is also people at the end of it. And if you're rude to them, if you're not conscious of their job and their responsibilities, if you take too long to come back on things, there was an instance where Revolut apparently took months and months to send a simple document, and it was just a bit of a FU, and it just...
So there's two things I want to focus on there. So first of all, regulators, okay? You may disagree, you may agree, but nonetheless, there's an element of respect there because they do have a difficult job. Look, if you look at the FCA, and I don't often agree with the FCA, and I do often disagree with the FCA, and that's okay to do that. But as long as you understand what's driving them. So, they are politically under pressure at the moment with the growth agenda. They are under pressure from various media outlets because of things apparently that they let fall through the cracks. Okay, so you have to understand, to your point, there are people behind this.
And they're underpaid, guys. Like, they don't get bonus. Sorry, FCA people for outing this. They don't get bonus. Their levels have shrunk. Yeah. So there's less promotion opportunity. It's like, do you remember way back in our heydays, people used to be a career break to go to the FCA.
Yeah.
So the people you're dealing with are under pressure.
It used to be the same thing with compliance. You send people who are about to retire, who don't want them anymore, you throw them into compliance. Yeah, absolutely, many years ago. But the other thing to consider, if you look at the Revolut example, so their culture today is fundamentally different to what their culture was let's say 5 years ago, which was driven by their founder.
Yeah.
So if you look at their CEO for Revolut UK, if you look at their chief compliance officer and their MLRO, these are experienced individuals.
Yeah.
Yeah. Now, 5 years ago, they treated compliance and financial crime risk just as an opportunity risk.
Well, do you remember when they all quit on the same day? It was like the CRO, the MLRO, and the CCO were like, we're out.
Yeah. I think, over the period of 2 or 3 days, about 6, 7 senior staff either resigned or walked or whatever. The problem I have with that kind of approach to regulation and regulators is that you are never going to win. So if you take that kind of aggressive stance with the regulator and say, look, do you know what, I'm going to ignore you, or I'm going to do it anyway, or I'm going to say our logo is get shit done, you are going to lose from day one. Now, I have nothing to say bad about the founders of Revolut, for example. I think they've done a phenomenal piece of work. But one lesson is the founder caused a lot of those problems.
But okay, I'm going to play devil's advocate here because
Sure.
I ponder it a little bit, and it's actually to my detriment. The inherent cost of starting a fintech, if you're just looking at financial crime and compliance hires, is astronomical percentage-wise to any other area of the business. It's it's startup prohibitive. I wonder if the reason Revolut is the behemoth that it is it was a little bit punky, and it was a little bit like on the edge of what's acceptable and cutting corners. And
I mean, it's certainly a strategy. You can grow so big, too big to fail.
yeah, but
Possibly.
I wonder if they skirted around a lot of cost and kept their overheads low when they shouldn't have. I'm not saying it was the right thing to do, but perhaps there's a reason they're the most successful that we've had in a very, very, very long time.
I think Revolut made so much money that they could then be seen to afford some of the
Fines.
conversations and arguments they got into. I was having a similar conversation with someone at Wirex, lovely guy, whom I won't mention, said we were looking at a competitor and we were analysing the competitor's onboarding process. And this competitor's onboarding process, in my view, was very slack. Therefore, they could onboard a lot more people. Okay, but do they really know the type of people they're onboarding? I would argue not. However, they were onboarding a lot of people. And we were having this discussion as to, well, is that their strategy? Is their strategy to grow so quickly, to have good revenue in the bank, as it were, saved up for the inevitable enforcement action that will come along?
Yes, I agree. And like in the case of Revolut, the press, the PR, it was the name on everyone's tongue. It became, in Whitehall, it was, we can't get fintechs and Revolut won't even IPO here. It became this like symbolism for the restriction of regulation here.
Yeah.
So that goes back to my point that I was digressing down just before when we were talking about hiring MLROs when you're going through licensing and things. We have got a new trend in recruitment where people want either them for part-time, short-term, or low salaries.
Yeah.
Because to them, if they may have had investment, but they're not got their license. And once, you know yourself, there's a lot of dead time doing license applications. There's a lot of waiting around while the FCA hopefully looks at your application. So I can understand from that perspective why they don't want to pay someone 150K.
Yeah.
120K, I think, for a new license application, and they can do it part-time, fine. What's your thoughts on part-time MLROs?
Depends on the nature of the business.
Okay.
It really does depend on the nature of the business in terms of what is the business applying to do? What kind of geographic or customer footprint does it want to exploit? And therefore, what are the risks it wants to run with? These are the questions the regulator will ask. I don't think the regulator cares whether someone is a contractor, a consultant, whether they're full or part-time. What they care about is, have you just brought this person on simply because we told you to bring this person on? Or are you taking your risk management seriously? So I would argue, the analogy I would use is, are you going to buy a car without checking the engine? Okay. No, you just want to look at the shell and you don't really care how that car runs. So therefore, if you're going to go for a license application, surely you want to put forward your best case possible. And that means investing. I mean, I would argue again, you shouldn't be in our market. You shouldn't be in the payments market or the banking market if all you're going to do from day one is just look at your costs, because these things do cost money.
They do.
So it's for me, it's how serious you are about getting the license.
Okay, then hypothetically, you and me are setting up a new payments company. It's called Kiwis Are Cool. you've hired your MLRO. From a risk mitigation perspective, you're the CEO, by the way. I'm the really cool recruiter that works with you. You've hired the MLRO. We'll call it head of compliance. What would be your next key hire from a risk perspective?
So I think it's really important to get the operational aspect of what you're doing right as well. So don't forget the MLRO, head of compliance, second line oversight.
Yep.
Okay. They're the ones who are basically going to tell you where the operations, where the first line of defense is going wrong. Okay. So you don't want them to tell you that. You want them to tell you everything's fine. Because essentially your key risks are embedded in your first line of defense. So I would say my second hire, probably my first hire, would be more like a fin crime operations director.
So KYC, transaction monitoring,
exactly.
Screening.
Yeah. Get the basics right first of all. So this is not about bringing in a heavy hitting MLRO. This is about making sure you get the right people at the right time, the stage of your growth. But fundamentally, they're here for different reasons. So operations, get your transaction monitoring right, get your onboarding right, and then bring in someone else who can oversee it and report to the regulator and report to your board.
It's interesting you say that, actually. Sorry, just to cut in. Hiring the MLRO or the CCO. I think people not in the know assume that these people know how to design an onboarding procedure or know how to do onboarding. Sometimes they've never done it, right?
Yeah.
Sometimes they have. A lot of the times they have. But it's really digging into the experience of that person. And that's why certain profiles will never suit a new startup, because they've been so strategic and second-liney.
But I think this is why the RegTech market is so buoyant and has been buoyant for many years. Okay, so I've come across in-house built controls and procedures. Okay, some have been amazing, others have been atrocious. But there is a market there ready to serve you, where you don't actually have to build these things yourself. You can go to the market and expertise will come along with it. So this is how Wirex has built its onboarding through the years. Now we have partnerships with, global companies who help us with the onboarding, the verification, the sanction screening, blockchain screening, etc., etc.
Yeah.
Now we could build all that ourselves, and I'm sure our engineers, who are amazing, can do that. But do you want to take that risk?
Well, a lot of the firms do. So that's what we see. It's usually when it's still founder owned, and they look at the engineering teams and they say, "What are you guys doing over there?"
But I think that's okay, because it's staged. It's founder owned. They're fairly early in their maturity, and that's okay. When you get to, let's use two examples from earlier this year, maybe last year, Starling and Monzo.
Yep.
Okay. No one can say that they're fresh out the box fintechs. They're not. They're regulated banks.
Yep.
Okay. And they were enforced against by the FCA for frankly basic failings. Most of their systems, I would argue, they tried to build themselves. Now, that would have been the right answer, I think, maybe 5-10 years ago. But now, that's not the right answer. And I think that's the problem. Companies in our space forget that as you mature, your control environment must mature with you.
Yep.
If it doesn't, inevitably you're going to get caught out, be it because you've allowed a sanctions individual to withdraw money, as in one case last year.
Yes.
Or in the case of Monzo and Starling, you've signed up to a voluntary undertaking, which you then decide to ignore. Okay.
Yeah, but it is true that if I were to make up a number, but I would think it's pretty accurate, 90% of fin crime fines start in the first line. Like, it's with controls, it's with people not understanding what they're looking for, or it's not tweaking it, or buying an off-the-shelf solution, as in the case with the earlier AI tools that were coming through.
I would counter that point slightly. In my opinion, 90% of enforcement happens because the board didn't do their job properly.
Ooh, expand.
Well, because you have a board. The board is the governing group of individuals that oversees the key activities of the business.
Yeah.
So an MLRO, a fin crime director, a chief operating officer, they escalate matters via various committees, no doubt, in larger organizations to the board. The board have ultimate oversight and accountability. So where are the board in these examples? Who asked the
Who is the board,
questions?
right? Like, where are they bloody coming from? They're usually some mate of a mate of a mate who's never...
Can't possibly comment on that, but yeah, they usually are. The chair of the Remco is pally with the chair of the audit committee. Yeah, we know that happens, but nonetheless, the board are there. Without mentioning companies' names again, it's not really a failing in the first line. It's not really a failing in the second line. It's a failing of oversight, and ultimate oversight is a board accountability.
Could it be flipped on its head that it's a failing of autonomy? Why does the MLRO have to report to the CCO who reports to the CRO who reports to the board? Like, why can they not just say, we need this, it's within the scope of reason, we're going to get this, and this is what we're going to do?
The MLRO should report to someone on the board as a dotted line, and the CEO.
I agree.
So many MLROs or heads of compliances I've come across report even to the chief financial officer.
Or the COO,
COO, which is the first line.
It's like trying to explain netball to a rugby person. They're both sports, but they're not going to give you the play-by-play, and then you've got to ask that person to go cap in hand and say, we really need 3 million for a new system. And they're going to say, why?
Yeah.
The one we had is working properly. No, we've not had a fine. And that's where the risk mitigation factor comes in.
And good risk management doesn't have to cost a lot of. It doesn't need to cost a lot of money, because I think you hit the nail on the head. There is the autonomy and the empowerment that you offer people in these particular roles. So if you have an MLRO that's reporting, for example, to a chief operating officer, which is madness, but let's say you have that. Okay, well, what level of empowerment are you giving that individual to say no?
Oh, totally. The CEO is going to go, well, I said yes, so off we go.
Absolutely. So in the case of Wirex, we have a number of MLROs, each covering a separate entity. Each of them have a dotted line to someone on the board. So my MLRO, head of compliance, lovely guy called Danush. I think you know him.
Love.
Yeah? So Danush reports into me. Now, if he doesn't like something that I'm doing or saying, he's got a line to a member of the board, and I think that's absolutely right.
Okay, not that this is a real life example, but in a practical world, give me an example of when that might come in effect. I'm sure this isn't a case, but
okay, so this is not a case linked to Wirex, but it happens all the time. You want to onboard a customer. Let's say you want to onboard a corporate customer, and there's red flags everywhere.
Okay,
but the commercial value of that customer is such that there's pressure to onboard that customer. So the head of compliance, the MLRO, looks at it and says, we really shouldn't onboard this customer. There's too many red flags, whatever reason. And they're overruled by CEO, let's say, or head of product. They're overruled. Say, no, we get what you're saying. We're going to onboard this customer. That happens all the time. Now, that's actually okay. However, where the MLRO sometimes fails in that example is to document the reasons behind his or her recommendations.
Okay, what do you mean by document?
Right, so I always say to my guys, keep your receipts.
Yeah.
Okay, make sure any decisions you make are documented so you can demonstrate the thought process. Regulators will often disagree with your answer, but they cannot disagree with your thought process as long as you can demonstrate you've had one and you've documented it. So that's what I say to my guys all the time. And I follow this advice all the time. I make a decision. Why have I made that decision? Right, let's write it down. Let's make sure key stakeholders are aware of how I got to that stage.
Yeah.
Okay? Because anyone can come along and say, I disagree with you. Fine, but you can't disagree with my process.
In the case of somewhere like Wirex, where it's not an SMF 17 title, is it?
No.
Is it the same culpabilities?
We are a regulated EMI, so absolutely.
So if Danush hypothetically onboarded someone that was a human trafficking, money laundering, or weapons seller, hypothetically, is it still his personal responsibility?
Absolutely.
Yeah.
Yeah.
And so that documentation is also helping him in that instance.
Exactly.
Then. Yeah.
Yeah.
Because it does need protecting your personal liability.
Personal liability is so important to acknowledge that, because so many people in roles such as head of compliance, MLRO, they don't actually fully understand their personal liability here.
I don't think people think it would actually ever happen, because it's not like in the case where there has been very few cases where it's been prosecuted personally, hopefully because people are documenting it. Doesn't mean it won't happen though.
So I think for me, it's not just about how you come across to a regulator or other stakeholders.
Yeah.
It's your own personal integrity and brand as well,
Yes, and morals.
I think that's really important. I think, people will laugh when we talk about morals in finance.
I wouldn't laugh because I know all the fin crime people,
right,
and they're the most moral, they are wonderful and they really care about their job. Actually, this is a question then, now that you have been on both sides of the fence as the CEO, what advice would you give, and any MLRO, but maybe someone who's not super experienced, how would they approach you? What would really have an impact to say, I don't think this is right? Because I'm sure coming in and saying it's my name on the door as the MLRO is not the best approach.
No, it's a difficult question because it sometimes it takes guts. It takes guts to stand up in a corporate environment and say, I don't think this is right.
For a lot of money at stake, right?
Yeah, absolutely. Yeah. So I would say just understand your reasons as to why you want to come to that conclusion. Okay. Socialize those reasons, get people on side, work the room before you present it. And I think that fundamentally is really important, because if you have support.
Who would you get that support from?
Well, I think other experts in the field, if they're available in the company. So we talked about, the 3 lines of defense earlier. Okay. You have someone who's in charge of the operations, someone who is second line oversight. You may have a head of legal. You may have a general counsel you can turn to. Just speak to them, understand maybe a different perspective before you make the ultimate call on, knocking on the CEO's door or the founder's door and saying, we're not going to onboard this customer. I think that's really important. I think that's a big failing I see all the time, where people think just because by dint of their title, they can make decisions, which is great, but you've got to have support for those decisions. You've got to bring people with you. And that's a sign of a great culture as well, by the way. You can do that.
Because I'm sure banks have the same. I'm certain banks have these conversations, but I just think, like we're talking about with fintechs, where the sales cycle is so much shorter, and the sales team have very aggressive targets to say to a company, a third of this quarter's profit, I'm not doing. I'm just not okaying. It does take a lot of guts, and it takes a lot of socialization, like you say.
But also, you've got to help create solutions as well. We don't want financial crime or compliance experts who all day long say no.
Yeah.
I mean, what's the point? We want people like Danush, people like myself in my previous role, say, okay, maybe we can't do it the way you originally think, but maybe there's other ways we can do it. And then go away and try and find a solution. Because not everything is black and white. Not everything is crystal clear at outset. You tend to find the more you dig, the more you think about it, the more you get support from others who can help you with your thought process. Sometimes there are workable solutions. Sometimes there are not. But you have to just go through that thought process. I think in the past, it's fair to say that many people in the compliance and fin crime space, say, no, we're not doing that. And I'm saying we can't do it because I'm the MLRO and I make the final decision.
Yes.
That's not going to win you any supporters, is it?
Well, it's not going to win you any jobs these days. The job of a compliance person, is particularly the MLRO and CCO, has completely changed.
Yeah.
And I do know it's the fintech startup commercialization of the role, and banking people moving into it, and then fintech people moving into banking. To get a job in financial crime, you need to talk about strategy, you need to talk about finance, you need to talk about customers, you need products, geography. It's no longer knowing fin crime. It's like the CEO of fin crime is the role, I think. Is there a particular change that you've seen in the market? Because you've been doing it a fairly long time.
I've been around a long time, that's what you say.
How am I going to finish that sentence?
I mean, the biggest change I've seen is where compliance functions, financial crime operation functions are becoming an embedded part of the business.
Okay.
Not just an add-on, an afterthought, or a barrier. They are actually being utilized in the right way. And by that, I mean they're being utilized as a competitive advantage. You can sit down with investors now, for example, and you can say, take a look at all our products, take a look at our P&L, and then take a look at the way we do things in a compliant fashion, but also with a commercial lens. And that, to me, is unique in terms of getting people on side. Because, as I said, as I started off with this conversation, no one wants to do business with you if you're about to be hit with a regulatory fine, or suddenly, there's reputational damage coming your way because you've onboarded a sanctioned individual or whatever.
Yes.
So I think compliance is a competitive advantage, but also it's a competitive advantage for another reason, because it can be efficient as well. So, you know, I have a fantastic FinCrime director, operations director, who's always coming out with new ways to be efficient, new ways to use AI to help with the efficiency side of things. And that obviously will save money, but more importantly means we can onboard people quicker and even more safely as well. So it's part of the business rather than, as I said, an add-on, which, you know, 5-10 years ago, that's exactly what a compliance function was. It was an add-on.
Oh, it was very back office. It was the back office of back office. It was way over there on a different floor sometimes.
Yeah, that's right. You know, you can never walk into this, you know, the sales area and you can never ask questions of them without due process. All that nonsense is gone now, thankfully. Well, certainly, I mean, it never existed in Wirex and it never will, but in other organizations, hopefully, it's fading away as well.
But that is like, actually something we've probably not touched upon on this podcast before is the profile of the person that's coming into compliance with financial crime. I really strongly advise people, if you're in even a first line or a second line in financial crime and you're like an AVP or you're kind of starting your career, get to know sales, know their pain points, because then you can become a better advisory person. If you understand the other side of the fence, you're only going to become more informed.
100%.
Yeah.
So the founders of Wirex, Pavel and Dimitri, they're very vocal about every single person that works in Wirex must know the product inside out.
Ooh, I love
Doesn't matter what role you have. You could be the PA to the founders, or you could be a CEO or a FinCrime director. You've got to know the products. Now, you can't argue with that. That makes perfect sense.
Of course. But how does that manifest? Like, do they do training or do you just pop quizzes through the day?
We do lots of town halls where we talk about products.
Yeah.
We have dedicated teams who talk about innovation, new products being launched, new products on the roadmap. We try and cascade as much as possible internally. Sometimes it's not possible because of the pace we move at. But where possible, we try and bring staff in for testing, for beta testing, for example, as well. So there's lots of innovation, and we've got lots planned this year.
Yeah.
But it's all, you know, we involve staff as much as possible, because unless the staff know the products, well,
they're not going to be invested in
they're
what.
not going to be. Yeah,
no, exactly.
absolutely.
They may as well go work at like HSBC or Barclays or whatever. It was interesting when I was looking at your career, because it looks like you were like big banking, consultancy, everything, and then you pop up at Clearbank right at this critical point for them. So what was that role there? Sorry, just for everyone, it was, when was that, 2020?
Clearbank was about 5-6 years ago. Yeah. That was amazing, Clearbank. So let me tell you the context for it.
Yeah.
So I worked at Nationwide Building Society in internal audit for a number of years. Then I was made redundant. Okay, terrible time for me at that stage, thinking, God, what do I do? So I could easily go back into banking, big organization with, you know, 100 layers of management and so on. And I remember speaking to a number of very close ex-colleagues from previous organizations. They said, look, Chet, what you need to do is contract. Get to know other markets.
Great advice.
Short-term stints.
And busy at that time as well.
Oh, incredibly.
Yeah.
And so my first short-term contract was at TSB. And at TSB, small bank, did things differently. Yeah. So spent 6 months there. And then I went on to Clearbank. Now, Clearbank was amazing. It was my first proper fintech.
Yeah. What a fintech to go into as well.
Absolutely.
Especially at that time when they were going through the growth and they're looking at new products.
They're going through licensing applications. And I met some incredible people at Clearbank that I keep in touch with still. And what that did, my stint at Clearbank, was open my eyes up to opportunities and also different ways of working. So Clearbank at the time had this great ethos where it wasn't just layers and layers of management. If they wanted something done, they would get the right people around the table and say, right, are we doing it? Are we not? Why not? Done. And move forward. And I think that for me just made me think about how differently we can work.
Got a refreshing
collectively.
approach.
Yeah, absolutely.
And what was your role there specifically doing?
So I was looking at transformation at the time and also clearing up a few areas with the help of the then MLRO as well.
How on earth do you go from audit to transformation?
There are commonalities in terms of when you're in audit, essentially you're looking at controls.
Oh, true. Okay, yeah.
And then you specialize in a particular area of audit, be it compliance or financial crime. So you can take those skills, they are completely transferable to other areas, be it transformation, be it second line, third line. And I think that's the sort of story of my professional journey, is that just be aware that you pick up so many transferable skills along the way. Don't pigeonhole yourself into, oh, I've only worked in product, therefore I can stay in product. Well, no, actually, if you worked in product, you'd probably move into compliance.
Yeah.
If you moved in compliance, you might be able to move into audit and so on.
Yeah.
You know, there's so many ways to cut that.
And so from Clearbank, how you contracting there, you said?
Yeah, contracting Clearbank. Then I had a short stint at Metro.
Yes. Interesting to go back. Well, I suppose it wasn't traditional banking, was
No,
it? Not
see,
with what they were doing.
No, what they were trying to do, Metro, was again break that traditional banking mold, with some success and some failures, but they were doing their best to do that. And that's why I joined them at that stage as well.
Metro, I think, is this dark horse of a bank. No one actually understands that they have like their asset financing. They've got like private banking there or something? Like they just...
Yeah, I think so. I'm not sure.
Yeah, like that. You just think that they're like... I personally thought they were just a retail bank for like small enterprise.
I think that they wanted to come across as a different kind of retail bank.
An everyman.
Yeah, possibly. And I know they've redesigned their strategy because of issues that they've faced, and probably the right thing to do. But what they originally tried to set out to do was break that mold of the stuffy retail bank that we all grew up with.
They were the first neobank, weren't they? Like they were the one everyone goes, and they had the branches. Do you remember you could go and count your money in the branch and stuff?
And I think that was their unique selling point, their branch footprint.
But it was customer centric. Like it was like, I think banking still to a degree at the moment is, or it used to be, we're open Monday to Saturday. These are the hours. You, the customer, do what you're told. Bring us in all these documents. Shut up, you can't have a bank account.
The hours, they're still being dictated to. You know, you try and find a branch of a large building society or a bank open when you want it to be open without massive queues.
Find one, to be honest. It was another thing. They're all shutting down, aren't they?
But I think, I do empathise with... I empathise with those people who say, no, we need a branch network. And I empathise with people saying people just don't use it. So why are we paying all this money? I don't know the answer.
I mean,
thankfully, I'm not involved in that.
Horrendous rental costs at the buildings and things.
Yeah.
So, okay, so you had tried contracting. You're obviously very good at it.
I loved contracting.
Yeah.
Really enjoyed it.
Yeah.
Because I was my own boss to some extent. I could, yes, you had to make sure your next engagement was lined up to pay the bills. But you could choose because the market was buoyant, and my experience spoke for itself. So
what a time!
and
it has to be said, it's not the same, guys. So we have some empathy in this conversation that contracting is quite tough at the moment.
Yeah,
but
it is at the moment, definitely.
Those post-COVID years and the COVID years were just bananas.
Yeah. But I don't think the government has helped with
IR35. IR35 is a hokey pokey nonsense. Yeah. It is so, you can get around it, you can get under it, but most banks are going, well, we want to just be on the right side of this. So even when it can be, it's just ignored. So just changing your gears a little bit, when you went in as the CRO role, was it a big project to fix at Wirex, or was the foundation pretty much there?
A foundation was there.
It's a politician's answer, isn't it?
So there was definitely a foundation. I think it just needed further work. And it needed someone like myself who had a history of doing something similar in other organizations. Yeah. Just to take hold of it and really push it through in terms of, okay, we've had some issues. We may have had some problems.
What were the issues and problems?
I think fundamentally, Wirex, similar to other fintechs, outgrew its control environment.
Yeah, another politician's answer. Very good at this now. You're media training.
Well, but that was 3.5 years ago.
Yeah.
We are, in terms of what Wirex is now compared to 3, 4, 5, 6 years ago, completely different organisation, both commercially and from a risk point of view as well. But that's part of our story, our maturity. Yeah.
And you guys were the early adapters, early people that were using fiat and crypto together, right? Like
Wirex, I believe, were one of the, if not the first, to integrate fiat and crypto availability through a debit card with Visa and MasterCard.
Okay, I've got a naive person's question here. I've got crypto, which I do, but I want to use it to pay for something. Is it quite volatile, the rates, and like how do you figure out what you're actually paying?
First of all, the value of the cryptocurrency obviously fluctuates.
Yeah.
So the volatility of that fluctuation is very much dependent upon the crypto holding you have.
Yeah, right.
But essentially, if you want to use your crypto for everyday spending, absolutely, Wirex can help you with that, with a Visa or MasterCard backed debit card. And that's the beauty of what we're trying to do. We're trying to integrate traditional fiat approaches with crypto. So if you think about some economies where there's high inflation, let's look at some South American economies where inflation is double digits.
Yeah.
So if you're someone who wants to buy your weekly shopping, from week to week, you don't know what that's going to cost you. You know, a loaf of bread could be, I don't know, $3. Next week is $5, $6 because your local currency is so much under pressure.
I see.
Yeah? Now imagine if you have stable coin holdings, so basically crypto backed by a stable currency such as the dollar or sterling, and then you have your holdings in stable coin, and therefore that inflationary factor is much reduced. There's still inflation, obviously, but it's much reduced. Surely, for you as a consumer or a business, you know, that's an ideal solution
the
for
business. When you're doing large purchases, surely that is...
Or even small purchases, because it will...
And so what's the customer, aside from that kind of need, who else, like in the UK, who's your typical kind of customer, or who would use it?
So I think typically we have people who've been active in cryptocurrency for a long time. They like our app because of all the various services we offer.
Like what?
So we offer things like growth products through our entity in Italy. So we have various entities with different licenses.
Okay.
Yeah. So we have an entity in Italy that's registered with a local regulator that offers our crypto services, and we offer those into the UK and in other countries as well. So they like some of our growth products. Some of our we have a private proposition as well. So if you're a high net worth individual, we give you bespoke over-the-counter rates, for example.
I see.
And we give you a lovely black metal debit card, again, backed by Visa.
But that goes back to understanding who your customer base is, right? Like that is this is a generalization, but the kind of people who understand crypto and work with crypto and do all this kind of stuff are a bit cooler. They're either really nerdy or they're cool, but you know,
you'd be surprised how many over 60s want access to our app.
I am surprised.
Sometimes we have to turn them down because we think they're vulnerable, where we do ask lots of questions up front.
Now, what kind of questions? That's super interesting to me.
So we would ask, first of all, there are two stages. There's a regulatory requirement in the UK to ask certain questions to ascertain if someone has the knowledge to expose themselves to crypto.
How? I didn't know that. That's cool.
Yeah, it's part of the FCA's financial promotions regime that came out some time back.
Awesome.
Where there's a bank of questions, and you can't coach a customer to answer them. Yeah, so that's good. Because we don't want people coming to our app because a friend said, they can double their money overnight, because that's not what we do.
But you're right. People would be doing that. Like go to crypto and then they Google, and you guys are one of the first names that pops up. So
exactly.
Yeah.
And then we also ask additional questions which are designed by our fraud team, for example. So let's say, just put it as an example, you're over 60 and you want to access to the Wirex platform. So we would ask you the standard questions that we're obliged to ask, but then we would ask you some other questions, such as, has somebody else referred you to us? Has somebody else asked you to open an account for us? So we do as much as we can up front to make sure that people who want access to our platform do so for the right reasons. We're protecting ourselves, but also we're protecting them as well.
Is it hard to catch, because like ongoing monitoring relies on patterns and looking at what people are doing and are they doing what they're saying? Is it hard to do with you, because I imagine it's not an everyday use card for some people, so they might just use it for one-off purchases?
Yeah, we have plenty of behavioural and transactional rules in place that help our fraud team identify potential flags.
Because there's an argument to say that, like HSBC retail has it a bit easier to catch these things because there's so much data to pull and rely on.
Possibly, but it's the extent that data changes, because people's spending habits change all the time.
Yeah, true.
So what we look at more and more is behavioural analytics instead. So it's not what the card is purchasing, it's how it's being used, how often it's being used, which retailers it's being used at.
I see.
And we gather that information together with IP information, where it's being used. Is it through the phone? Is it through I don't know, Google Pay, or is it directly with a card?
Yeah.
So there's a variety of things. I'm not the expert. We have a great head of fraud prevention, a guy called Kesh. He takes care of all that. And again, that makes us a competitive advantage as well,
Yes.
because who wants to join a company that has ridiculously high fraud rates?
Well, that's right. Do you know, years ago, someone stole my Amex out of my purse and spent £300 on McDonald's. And I called Amex and they said, "Are you sure it's you? It's not you?" And I said, "Sorry, I don't need that much." That's it. Going back to the sort of the fraud conversation, that's another role that's changing. Hooly dooly, that is changing. That is tech, analytics, behavioural, everything. It is no longer the second cousin to fin crime.
Yeah, 100%.
What, aside from what we're just kind of talking about, what do you see as the future of fraud? So I know that sounds really awful, like a terrible panel at some conference, but
I mean, if I can look, it's not going away. Okay, all right. Fraudsters typically will be at least 3 or 4 steps ahead of you.
Well, they don't play by the rules, do they? They can do what they want.
So we have to play by the rules. There are so many regulations and guidance and legislation that we have to follow.
Yeah.
Okay, so to some extent we are boxed in what we can and can't do.
Yeah.
But equally, then we're challenged all the time, saying, "Well, why didn't you spot that fraud?" Or you know, we would, I don't know, for example, we would lock a customer's account because genuinely we're worried. And then the customer would complain saying, "You locked my account." Then the regulator would say, "Well, why did you lock that person's account?" So it's just, you know, it's a very
Monzo's
difficult
getting
balance.
a bit of stick for it at the moment, aren't they? Locking people's accounts. I see it almost every day over LinkedIn. It's a really interesting thing. They lock them straight away.
Yeah.
Would you not call the customer and say, "We're going to lock your account. We think it's been shifty"?
No, you see, again, without going into too much detail, there are various tipping off rules and regulations.
Do you go into detail? What would be the, like, "You're a naughty person, I'm cutting your account"? What would be something like that?
Well, you'll get a scenario where, for example, you might get an email from your bank saying, "Jess, we're gonna close your account, but we can't tell you why." That happens every day.
Yeah.
Okay. So first thing you have is someone saying, "Well, surely they should tell you why they're closing your account." You would think logically you should know
It's
why.
my money.
Yeah,
Give
it's
it
your
back to
money.
me. Yeah.
Closing it. But they can't, because if they tell you why they're closing your account, they may be accused of tipping you off. Yeah, which could put future prosecution, for example, or investigation in jeopardy.
But okay, question then, pragmatically, does your mortgage still go out or does everything get blocked?
Everything gets blocked.
Gee, hooly dooly.
Where did I see it? I think today on LinkedIn.
That's right. That was what piqued my interest.
There was a guy with Monzo.
That was that's one that's.
And his Halifax mortgage is due, can't be paid. He's got bills due,
And they
can't be
said
paid.
2 weeks until it gets reinstated, and I thought, you can't be doing
Between
that to
2 and
people.
6 weeks, they said. Yeah.
How like legally that would that would send me into a spin.
But this is the problem with the regulatory environment we have, not just in this country, but well, I would argue across Europe as well. You have different regulations that are not necessarily meaningful to each other. I'll give you an example, and this again I posted on LinkedIn because this is what actually happened to Danush. He received an email from the FCA.
Right.
Said, "Please call us urgently."
Well,
Okay, now can you imagine getting that sort of email?
Poops up anyone.
For a start, it would do, wouldn't it? Okay, so Danush obviously called them back. A customer of ours whose account was locked because we were worried about some financial crime concerns had gone to the FCA and said, "Wirex has blocked my account. I can't access my funds. I need to buy food for my baby." So clearly a very vulnerable customer there. So on the one hand, we did the right thing. We put what we call a soft lock on that account because we wanted to understand what was going on. There was something about the spending pattern that concerned our fraud team. So we then wrote to the customer saying, "We just need to know X, Y, and Z." But then on the other hand, this customer was vulnerable. They needed access to funds to feed their baby. So what do? Do we unlock the account and let them do what they want? Do we say, "Well, you can only buy baby food"? Well, how do you even
qualify that?
And how do you manage that? So you've got the money laundering regulations on the one hand saying, whatever you do, you can't, you must do this, you must do that. And then you've got the consumer duty on the other hand saying, well, all customers deserve the best outcome. You must look out for vulnerability. And both of those in isolation make perfect sense. Put the two together and then, trying to get that balance. I'm not saying they're wrong, but it's not easy to always get the balance. And, we make mistakes.
But what can the customers do? Like, because from my perspective, if they blocked my card and my money for 6 weeks,
Yeah, well, we wouldn't do that.
Who can survive in this day and age?
So the FCA are very clear on this, and actually you don't need the FCA to tell you this, but if you suspect something like that, be it so some form of financial crime, for argument's sake, conduct your investigation quickly and thoroughly. Okay. Now, the end to that, you might say, well, I don't have enough information to conclude the investigation, therefore I need another week or another week. Well, you're going to have to make a call. Because
that's the thing, that some firms don't have the allocated resource to investigate quick smart like that.
They really don't. And plus you've got to take a risk-based approach to these things as well.
And how serious would it be? I know you can't comment on the Monzo case or, specifically on the one you were just mentioning, but how serious would it have to be for the soft lock or hard lock to go on? Like, is it I just want to look at that, or is it like, we think this is...
Multiple flags.
Okay.
So it's not just, this person spent £300 in the McDonald's at midnight. It happens.
Could do.
It's, and also they've spent it in the McDonald's that they've never used before. And also their phone is 300 miles away.
Okay.
Multiple flags. But that's why we have an incredibly talented 24/7 fraud team that takes care of this stuff. And, sometimes we do have to inconvenience a customer, but by inconvenience them, hopefully for a short period, we're trying to save them from being victims of fraud, which is much more
I think this
dramatic.
is where the friction of man versus robot might start coming in, because as we automate and rely on AI for these triggers and these tools, that sniff test is going away. And, they might be... a human might look at the list of things you've just said and said, there's a reason for this and let's do a soft lock. If there's a rule in place where it hard locks the account straight away or anything, I'm not saying this is happening now, but in the future, right? And then that person, me, tries to talk to someone, but I'm talking to a bot and it's just taking me around in circles and circles and I can't get through to anyone, which is going to happen.
So we've bucked that trend a little bit.
Okay.
So we used to have lots and lots of automated rules that would essentially block an account if X event happened.
Yes.
Lots of them. Now we just have 2.
Okay.
Because what we don't want to do, so automation and AI within automation are tools. They should not be the ones who are dictating a particular strategy. So that doesn't mean to say we have lots and lots of manual intervention, but we have other analytics going on in the background, such as behavioral analytics as well. So we made a conscious decision that we would stop introducing automated locks and start introducing behavioral techniques that allow us to have a holistic picture of that customer and their spending pattern.
And is that a tool that you have purchased or whatever that layers over your transaction monitoring, sanction screening, whatever?
Correct.
That's so cool. Is there one that you, even if it's not the one you've used, but one that's really impressive that you've seen coming through?
There are plenty of impressive tools. The one we're using is relatively new to Wirex, and I just want to see how that plays out.
Okay, well, what would make it impressive? That's a better quick...
I think the most impressive thing it would do was to give us the MI we need quickly and give us pointers to certain MI. Then that would allow the fraud team to say, no, do you know what? There's a high probability this is a fraud.
Yeah.
And it's all about probabilities. It's very difficult to identify something that's definitely something in our space.
Well, it's people. People are unpredictable, as I know,
incredibly
with bloody
unpredictable.
recruitment.
With your spending, hundreds of pounds in McDonald's, for example, with Alex.
I mean, Truck Me might have. History could repeat itself. Just sort of stepping back to taking the role of CEO, I am curious about, this is going to be a hard question for you to answer, I think, but I'd like you to try. Why you? Like, why are you a good CEO? Like, why could you, out of all the CROs, make the jump to the CEO? What was it about your experience or your viewpoint?
So, from my perspective, I think it's my understanding of A, the market, B, the regulator.
What do you mean by the market? Sorry.
So, in terms of where the market is going, where our industry has been and is going next. So, just take the last 25 years and just look at how our industry has evolved and look how many challenges we've overcome. So, big financial crisis, big enforcement actions, variety of other challenges, both political as well as reputational. We've overcome all that. and we will continue to overcome. So I think our industry is getting stronger and stronger. And I recognize that. I don't look back all the time and think, oh, do you know, 10 years ago we used to do it like this. Why can't we do it like that?
Yeah.
I'd like to think, no, I want to think about 5 years' time. What's our market in 5 years' time? By market, I mean not only just consumers. What's the regulatory footprint going to be like in 5 years' time? What's the political agenda going to be like in 5 years' time? Not just in this country, but across the globe. Thinking ahead, I think that's something I've always done and always will do, because for me, being prepared is being ready. The other area which I think helps me in my current role is what we started off with. What actually motivates customers to join a particular platform?
Yep.
What motivates regulators to place trust and future partners to place trust with us? And I think trust is the key word there. How do you build that trust? So one could argue, we were talking about Revolut earlier. Revolut built its trust with its consumers because of the range of its products and the services it offered. If, however, they didn't have the range of services, that trust would be gone simply because of all their regulatory issues.
But I think also just on that, and it's kind of Metro-y, kind of a Revolut-y, kind of what you're talking about. They thought really about how their customer uses their product.
Yes.
It was mobile first, app first, like it was seamless. There was no friction for the customer. And talking about when, you know, the CEO and the perspective you have, people just kind of think about where they want to go, but they forget what their customers actually want.
Yeah.
And that's where they fall down.
And the customer is always king. Okay, we get
Yeah.
that. But in our industry, the problem is not all customers are equal.
Well, I agree.
And I think with Revolut, you talked about frictionless onboarding and seamless. Yeah, and they did have that, but they arguably, you know, sometimes you have to
They
build
got a
in
lot
friction.
of loyalty. Like, Matt down the pub setting up his first electrician business. He could get onboarded to Revolut and have an account that night.
Yeah.
You know, and that was unheard of before. And he's probably still with them, you know.
And I think, to be fair, Starling did the same thing. When I was
Starling did the same.
contracting, I opened my business account with Starling. It took less than 10 minutes.
Yep.
They asked for all the right documentation, but it still took less than 10 minutes, which was excellent. In Wirex, assuming you've got all your documents ready, our electronic onboarding is now down to 1 second compared to industry average of 18 seconds. Yeah.
Isn't that insane that we're talking about seconds in terms of onboarding?
That's
like,
what people
what
want.
a world we live in.
People want it instantly. You know, they want to download the app. They want to be onboarded, and they want to deposit and withdraw within minutes. And that's what people want. So we have to provide it.
Isn't it?
But we have to provide that with a regulatory context. And that's where the difficulties come in.
I'd love to know when that tide changed, because when I came to this lovely country, it took me weeks to get a bank account, and I had to drag along someone who knew someone, you know, to vouch for me. And it just, I'd love to know who was the catalyst for that change?
So
Metro?
who was the first disruptor? No, I don't think it was Metro. I think maybe, I think you'd have to go back to, Revolut, Monzo, Starling,
That's
people
what
like
I mean,
that.
is they have done a huge favour to the industry, haven't they?
They really have.
They've boomed a whole industry.
When I first opened my bank account many years ago, I had to make an appointment. I had to turn up with all my documentation.
Yep.
Then I had to wait.
And it came in the post.
And wait, yeah. But even now, you try and open just a standard bank account with a traditional bank that has an app. Okay? Honestly, clunky isn't...
I did.
clunky isn't the right
Well,
word.
not me. My husband was trying to open up some like Nationwide or something. I don't know what he was doing. And we got about 8 letters in the post. And I thought, who's got time to read letters these days, babes? I'm not going to read them. It's stupid.
Yeah, plus you just instantly think it's junk mail anyway.
You think it's junk mail or scam mail, or it's someone setting up some business with my address or something. So I do have one sort of round off of questioning, if you'll let me ask it.
Sure.
In terms of your background and getting into banking and compliance and all this kind of stuff, how did you do it? Is it like, was your family in banking? Did you
No,
know
not at all.
someone? Was it a tap on the shoulder?
No, we were, family were immigrants from Kenya in the early 70s.
Pesh is from Kenya.
Sorry?
Pesh.
Oh, small world.
Yeah, this is small.
Yeah.
Okay.
No, so my dad worked at Crown Paints.
Yeah.
It's a forklift driver. Mum worked in a factory. No, we had none of that. So So I left school. I went into sixth form, got A levels and so on. And I thought, right, what do I want to do with my
Good
life?
A levels? Were you smarty pants?
Bog standard A levels. I wouldn't say they're necessarily good today's standards.
Okay.
And I wasn't too sure what I wanted to do.
Yeah.
And I knew I didn't want to go to university, which was a silly thing.
That's unusual.
Yeah, I just didn't want to.
Especially for a son of immigrants, if I can say
absolutely.
so.
And, you know, it's something that I look back on, and I now make sure my children now know what I went through to make sure that they see the value of going to uni, obviously.
I see.
So anyway, I joined the Halifax Building Society in Wimbledon as the office boy.
The office boy, what, like the tea boy?
Yeah, I was making tea for the branch manager then. You've got to remember, branch managers there were like,
gods.
You know, they're absolutely. So lovely branch manager, Elizabeth Kildare, the Halifax in Wimbledon.
You know her name.
I will
still.
never forget her. She was just amazing. And to a, you know, 19, 20-year-old or whatever I was at the time, she taught me so much about things like office politics.
Oh, yeah.
She taught me so much about, you know, how to handle yourself in confrontational situations and things like that.
Isn't that like actually just to reflect on the COVID generation that have come through and all we're working from home? I do wonder, they're 5 years into their careers now. Like, have they do they understand the nuances of like, you know, like the unspoken rule that if you've had a bit of a bargee at the pub the night before with everyone, it's ignored the next day. You don't never.
But I don't think those rules were.
Maybe the rules don't apply these days.
Well, even to the point, I still get frustrated when colleagues keep their camera off when it's a Teams call.
Oh, I do as well. I think it's so disrespectful.
Would you walk into office with a hood on? No.
But also,
but that's because they've become used to it.
But I think once you get away with that, once you do it every time, you just go nip it in the bud.
Yeah, no.
Yeah.
Put a stop to that.
Quick stop. But that's how invaluable in your early career. And, you know, you do need someone showing you the ropes. You've come from high school.
Yeah, absolutely. But I've been lucky in that every role that I've done, someone has showed me something new, something different. And I've learned not just the basics of the job, I've learned so much emotionally as well from various individuals.
That's why you're a good CEO.
But also, it's also about taking risks as well. So, you know, ultimately, if you're in a role and you just want to do something different, you can procrastinate about it or you can do something about it. I'd like to think I've always done something about it. So, for example, when I wanted to change career path, I think I was, where was I? I was with NatWest then. And I thought to myself, actually, do you know what? I'll be good at consulting. Actually, no, I didn't think that. Someone said, Chet, you'll be great at consulting.
Yeah.
That was when new regulation was coming in, MCOB and CCOB.
Oh, wow.
Mortgage regulation. It was a while back. And I joined Ernst & Young. Thoroughly enjoyed that. And again, the partners and the directors and the senior managers at EY opened a lot of doors for me, made me just understand the vastness of opportunities that are available.
Yeah, but I don't know, Chet. Like, I think you are not giving yourself enough credit for the growth mindset. Some people aren't as open to learning, mentoring. Oh, I don't know a lot about that. I'm going to go and learn it. There's a lot that their ego is tied into their skill set and their expertise.
Yeah, there's too much of I know everything, I don't need to know anything else. That's just nonsense, isn't it?
I think it's so silly.
Everyone should be learning all the time.
I agree. The joy of life is learning. Like,
but also there's no excuse not to now.
Yeah, no, that's
you know,
true.
everything literally is at your
literally on our
fingertips.
phones,
Yeah, absolutely. And I genuinely do enjoy learning new things, as long as they interest me, obviously, you know, which...
Yeah, sometimes my husband tries to make me learn things and I just don't care.
I bore my wife endlessly about stuff that I've picked up. I said, guess what I learned today? Sure.
Oh, I bet it's all boy stuff like geography, war and something else.
No, it's not.
Okay, and so the roles that you were getting at KPMG, would you advise someone to go into EY? Pardon me. Would you advise someone to go into consulting at that stage in their career? Yeah,
100%.
Yeah.
I was with EY only for a relatively short time.
Yeah.
It doesn't matter. It was a valuable experience, and I would advocate. You know, everyone should have a stint in consulting.
So when you see that on a CV, you think, okay, they've done it. They've done the hard yards. Yeah.
And it's tough work.
It is.
And you have to be resilient to keep up with it.
Yeah. I mean, they get their pound of flesh. Like
absolutely.
Sometimes we go to networking events, me and Ian, and, you know, the consultants come in at like 9 p.m. We think, where have you been? Then I work. You're like, oh, okay, good on. This is Goldman Sachs or something. Okay. So I was thinking about, I ask this question sometimes on the podcast around books that people read, but was there any kind of like actual learning that you did going from compliance to CEO, like strategy, MBA, anything like that, you thought, I need to really dig in and learn this?
No, I'm not a great fan of what I call these airport self-help books. And I know there are millions who are, okay? I personally am not. I mean, I don't know, I find it difficult. Maybe it's just me that if I read something, then suddenly I'm a changed person. I think for me, mentorship and coaching are, for me, the key.
And that's what you've leaned into for.
Yeah, absolutely.
So have you got a coach, or have you like what?
I don't have a specific coach, but I know I have a network of professionals I can reach out to.
Yeah.
So, for example, when I joined Clearbank, great example, Charles McManus was the CEO at the time. You know, everyone loves Charles. He's got so much to offer.
Only ever heard the most wonderful things about him.
Yeah. And you know, there's strength in having a good network.
Yeah.
For me, that's much better than, I don't know, buying a paperback about growing emotionally or whatever.
Okay, then one last final question, which is quite a practical takeaway for someone. If they're in that sort of early-ish stage in their career and they want to find a mentor, I find it really tedious to go up to someone and say, can you be my mentor? I think it's really important you go in and say, this is what I think I'd like to focus on. 100%. Yeah.
So ask yourself the question, what do you need mentorship on?
Yeah.
What do you need coaching on?
Yes.
Really focus on that and you know, bring it down to a really detailed level. Then it's so much easier to find the right person. So maybe you want someone who can help you understand, I don't know, how you manage confrontation. Okay, because we all face confrontation in office, don't we?
Yes.
So how do you manage that? Well, okay, if that's specifically what you want, then you probably can find someone who can guide you through various levels, be it someone in people and culture or in HR or whatever it's called these days. And I think that's the trick. If you want more technical expertise, you need a bit of coaching to understand what the, I don't know, money laundering regulations in Estonia are.
Yeah. But there's loads of networks for that kind of stuff.
There's plenty.
I do think that people kind of think they need a mentor for a mentor's sake, but and they don't need to be long-term things. You know, you can just meet someone and say, you know, I really want to meet with you and speak to you about these regulations. Would you grab a coffee with me? Just grabbing coffees, coaching, all this kind of stuff.
When I was with one particular organization, they had a mentoring program. Okay. And I said, yeah, I'll be really interested in that. And they said, right, and these are the rules you have to follow. There you go.
I know. I get asked to be a mentor, well, not that often, but every so often. And I think, you just want to talk to me because you think I'm going to give you jobs.
Exactly. No, precisely.
They don't want anything to do with me.
Yeah, the first question is, can you introduce me to so-and-so? Yeah.
Oh, if I get one more vendor asking me for my client list. Right. So that concludes the podcast. Thank you so much for coming on. You let me ask a lot of dumb questions, and I think you did it very gracefully.
Thank you. Much appreciated.
Cool.
Okay.